Hey everyone, welcome back. My name is John Kutsmita, and in this video, we're going to answer a very important question, which is, should you refinance? So if you're a homeowner and you've been hearing about mortgage rates going lower, this is a very important video for you because I want you to be able to avoid the mortgage rate trap. And what is that? It's when someone is trying to talk you into a refinance that isn't actually going to benefit you. And believe it or not, lower rate is not the only thing you need to consider. Keep in mind, mortgage rates are decided nationwide by the mortgage bond market. It's not by the Fed, and it's not by any one individual bank or lender. Now, when you're out there shopping for a mortgage, what you should actually be doing is comparing the same rate on the same day across different options and comparing the fee in total for that particular loan. That's the only way for you to get a clear understanding of what your options are. Now, because this tool that I've built, LendZen.com, does all the work for you, it's fully automated and it requires none of your personal information. We've been able to eliminate pretty much all the humans in the process, which means our cost to operate as a direct lender is significantly lower than anyone else. So when you do those comparisons, you're going to see a huge advantage with LendZen's rates. But what's most important is you knowing whether or not you should even pursue a refinance. Now, because it's been a long time since interest rates have been doing anything but going up, now that there's a slight reversal, you're going to be getting a lot of pressure from people in the lending world trying to talk you into doing a refinance. And just because the rate is lower doesn't mean it's good for you. So let's head on over to LendZen.com, LendZen.com, so I can show you how easy this is, how easy you can decide for yourself without any pressure, without any sales calls, whether or not interest rates are in a position that are going to benefit you. So let's get started. All right, and here we are on LendZen.com, the homepage. You can scroll through here. It's just a little bit of information. We don't really bore you with a lot of text. We want you to get right into using the tool so you can see how much it benefits you. But if you are interested in learning more about LendZen and how we came about building this incredible innovation, you can click this yellow button here at the top. It's a bit of an About Us page. But let's get started. Let's do a refinance. The questions that are going to come up are pretty basic. I'm going to move through them pretty quickly. I'll stop and give some explanation when necessary. So we're going to do a regular refi, no cash out on this one. We then have an income profile option. Most people are going to be documented income, but depending on what type of income you receive, we've got an option for everyone, including cash flow, DSCR, and business style income or bank statement income. The whole set of options are here, but let's start with the basics of documented income. You can see in just a few clicks, you're already getting interest rates. These are today's featured rates. This is not a static image that we post and have sit up on the website for a week. This changes dynamically as mortgage rates change throughout the day, but it does just give you a quick glimpse of where things are. So it doesn't take you long, a few quick clicks, and you already know where interest rates are in the broader picture. What's really important is the customization feature where we can dive down into exactly your loan and give you an instant analysis of whether or not you should be considering a refinance. So let's start the customization. I'm going to use a 6.5% interest rate, and I'm going to do this based off of a $500,000 loan balance just to get us started. Of course, you can put whatever speaks to your loan into LendZen, and you're going to get an exact analysis for that. I'm going to put in a balance of $500,000 to get us going. Estimated property value, I'll just put in $1 million. Just so that loan to value ratios aren't an issue as we play around with this example. But of course, put in what makes sense for your situation. Now, my company and LendZen was founded in Honolulu, Hawaii. So let's use that as a location, but you can use any county in 50 states. U.S. veterans and service members can choose to see VA loans, but let's just stick with the conventional standard mortgage for now. We're talking a few quick other questions and off we go. Here we are looking at your interest rate options for this scenario. As you can see, we have the full list of conforming loans that are available for your scenario. You can click any one of these programs and see the full set of interest rates. This is real time, this is dynamic, this is not static information. As mortgage rates fluctuate and change throughout the day, so will this information. You can sort these programs based on rate, fee, or payment and look at them that way. But here we are, standard 30-year fixed. Let's just go ahead and pick the lowest possible rate, which instinctively, this is what most people do. They gravitate towards low rate. It has the lowest payment, but low rate by itself does not mean the best loan. Once you've chosen an interest rate that you think is in your best interest, you go ahead and click review analysis. And as you can see in just a few seconds, your entire summary and loan analysis is now done for you. Here's all the parameters that you put in. This interest rate slider right here is dynamic. And as you move it in real time, you can see the payment changing, the rebate or cost of that interest rate changing. And this is an important factor to keep in mind because low rate is going to have higher cost. Mortgage rates are determined nationally by the mortgage bond market. They're not determined individually by different banks and lenders. Everyone is taking your loan, fitting it into that conforming footprint, packaging it up, and selling it off to government-sponsored enterprises like Fannie Mae and Freddie Mac. And in the case of government loans like FHA and VA, those are being packaged into Ginnie Mae securities. But that mortgage-backed security market is determining interest rates nationwide. The entire mortgage machine is standardized. You're not actually shopping for rates when you're out there comparing options. What you need to be comparing is same rate, same day, and looking for the cost of that interest rate. And we're going to get into that a little bit here in just a second. But again, all of this is very playful, fully dynamic. So we're going to start off as we have done with the low rate of the day of 5.5%. Now we get into a rate review. This timeline feature is something that a lot of people don't consider, but it is hands down the most important part of your loan decision. And honestly, it's the only thing that's subjective. Everything else is based on mathematics. It's indisputable, but the timeline is what's going to dictate whether a rate is good for you or not. And we're going to talk about timeline here in a second. This is not just how long you think you're going to be in the home. This is also how long you think you're going to be in this specific loan. Now, keep in mind, interest rates have just started to decline. There's a lot of reasons for that. The Fed is not one of them. At least the Fed is not one of them yet. One of the main reasons we've seen mortgage rates improve slightly is because the inflation data has started to improve. For the last 2 years, one of the biggest reasons mortgage rates have been at 30-year highs is because inflation has been at 30-year highs. And the reason that inflation has such a big impact on mortgage rates is because of the mortgage bond market. Bonds do not like inflation. If you look at government bonds like the Treasury market, those interest rates reach a high as well. So that is the relationship that we're dealing with here. So if we think mortgage rates are going to continue to improve, then we need to be thinking about a shorter timeline. Although you might think you're going to be in the home for the next 10 years, this interest rate options that you're considering could improve significantly over the next year or 2 years, and you might be looking to refinance, or the rate you're looking at today could be much less expensive and much more attractive for you. So let's just stick with the 2-year timeline default that's in here. Now, as we continue to scroll, there's a little bit of information for you to consider here. We talk about the relationship between low rate and higher cost versus higher rate and lower cost, or in many cases, a rebate, which you can use to offset closing costs. And this is a big impact on what rate you should choose for your timeline. Shorter timelines are going to benefit greatly from those higher rates and those higher rebates because your recuperation or break-even point is much sooner. We're going to show you all that. It's very visual and very quick and easy to determine with LendZen. So let's continue on here in this section. Now we're starting to get some of that visualization of how a higher rate on a shorter timeline is going to benefit you because you're going to experience true savings right away. Now, this right now in this visual is not considering what your current interest rate is. This is just talking about all rates at the current moment. So as you can see in a 2-year timeline, the rate with the most savings is actually the 7.125. And you can change this dynamically and in real time. When you change your timeline, you can see how the graph moves and works together. Ultimately, what ends up happening is the longer you go out on the timeline, the lower rates are going to start to benefit you more. But keeping in mind, I can't hammer this point home enough, that we are in an environment where most likely you're going to see lower rates become less expensive over the next year or two. At least it's a very high probability. So you got to keep that in mind. And therefore, looking at an option where you're talking about an 8-year timeline probably doesn't make a lot of sense for you. Although you think you'll be in the home that long, you actually being in the loan that long is very unlikely given the current environment. And all of this is dynamic, so you can change your interest rate that you're selecting with the slider as well as the timeline. You can see how all this behaves and relates to each other. Very visual, very, very helpful, but we're just getting started here. You scroll a little bit further down and you can see we're already telling you what the recommended rate is based on the timeline that you're giving us. So longer timeline, you can see how the lower rate is eventually going to outperform, which we also show on the graph up here. And for shorter timelines, that the higher interest rate, which has lower fees and oftentimes those excess rebates, are going to benefit you. You can see that here. This 7.125 has a very large rebate. Keep in mind, we put in to start a 6.5% interest rate. So there's no reason, if you're looking to get a lower payment, that you're going to refinance to 7 1/8. But this is just giving you a comparison, not based on what you have yet. We're going to do that in a moment, but all interest rates at the moment. So based on a 6.5 at a 3-year timeline, that's really the first time you start to see very direct benefit from a recommended rate. But let's continue on so you can see more of the information that's here and you can make a smart decision about whether this refinance is going to benefit you. A little bit of info giving you the highlights. So 6 1/8 on a 3-year timeline is actually going to save you in aggregate $4,400. Now we calculate closing costs and everything in this analysis. So this is a true net, what you're going to have in your pocket by the time the 3 years is up when you do this loan with LendZen. On to the refinance review. It gets even more interesting here. So it gives you a snapshot of the loan again. So here's the $500,000 mortgage balance. When you do a cash out loan, this composition is going to be more complicated. You'll have some of the debts that you're thinking about paying off. Maybe you're doing cash out. All of that will be part of this composition wheel. Because this is just a straight refinance for a lower rate and lower payment, there's not much to show there. Now here again, not much to show in the composition. There'll be more information here if you were doing debt consolidation, but it does have your current monthly payment. And then the payment comparison, which is very important for you because you want to know that this loan is saving you money based on the rate that you choose, is the next thing that we can visualize. The dynamic slider and timeline buttons are here for you to play with so you can see how it impacts the payment comparison and the savings. And so that's always a good tool to use. But this is really, once it's all said and done, you've reviewed all that information, this is where all the answers are. The benefit summary. Does this interest rate benefit you? So if you're watching this video and you have a mortgage rate around the 6.5% range, this is going to be eye-opening for you. And whatever interest rate you have, you can go ahead and use LendZen.com, put your information in, and get this analysis and this benefit summary instantly. So as you can see on a 3-year timeline, this 5.5% interest rate is not going to benefit the borrower at all. So the way we're making this assumption, or this assessment, I should say, is based on monthly savings, which you are getting. You can see that here, $321. That sounds great, right? And this is really the thing that people are going to sell to you. Hey, this is going to be a great refinance. You're going to save $300 a month. But then when you look down and the cost to recover within your timeline, it's just not going to happen. So in 3 years, you're not going to get a benefit from this refinance. Now, if you go further out on the timeline, you can start to see it gives you this break-even analysis, right? So here we popped in a 7-year timeline. If you were actually in this loan for 7 years, you would eventually break even at the 4.3-year mark, which is 51 months. Everything after that point that you have recovered all closing costs, from there on, it will be true savings. So net, once all the costs of this loan have been recovered, you will, at the end of 7 years, have saved $10,000. But you got to keep in mind the chances of you being in this loan for that long is very, very unlikely. Not just because we think interest rates are going to improve, but on average, when investors are buying into mortgage-backed securities that contain 30-year fixed mortgages, they're not expecting to have their money invested for a 30-year duration. That's because most mortgages pay off in 5 to 7 years. People move, people refinance for other reasons. They got to do debt consolidation. Now, since 2011, we've really had this big surge in refinance activity, and mortgage rates started to rapidly decline starting in that 2011 to 2021 timeframe. We've seen we've seen mortgages pay off much, much sooner than that. So you keep in mind, this is billions of dollars are flowing into these securities, and their expectations are that it's very unlikely you're going to be in this loan for 7 years. So you should be considering some of their expectations as well. But even more importantly, when we talk about what's been going on in the mortgage rate and the bond market world of recent, the chances are in the next 2 years, you should be able to have a conversation around refinancing again. That's the optimistic outlook because the Fed hasn't even cut interest rates yet. And if we have any kind of recession and there's concerns of contraction in the economy or deflation, bonds are going to rally and mortgage rates are going to fall very, very quickly. So let's keep these shorter timelines in mind. So as you can see on a 2-year timeline, this isn't going to benefit you. Now, the question is perhaps what interest rate is going to benefit us. All we got to do is move the slider and we can see here instantly whether or not any of these interest rate options below the 6.5% will make sense. And in a 2-year timeline, here's the answer. There is not. There is not an option. Once you go to 6.5%, which is the rate you have, of course, there's not going to be any monthly savings because it's the same loan you currently have. So the first option below that is 6.375. And if that's not going to give you a benefit, well, then of course, none of these others are, right? You don't have enough time to recoup the cost of this loan. Now, if you go further out on the timeline, yes, you're going to see that benefit. But the big question is, are you really going to be in this loan for 4 years? Chances are that's not likely. Now, if you go through this scenario and you've made some mistakes or you want to compare another loan option that you have or whatever it might be, you do not need to start over. You can go down here to modify your inputs and see what that looks like. So real quick, why don't we try that? Let's look at another loan situation, maybe with a slightly higher interest rate so we can see what the other benefits might be for those with much higher interest rates. So on a $500,000 loan amount, a 7.25% interest rate, it's going to roughly have a $3,400 payment. So let's try that scenario so you can see how quick and easy it is to update this. And let's give some of those people who have higher interest rates a taste of what their options might be. But the big takeaway here is so far, just because rates are lower, doesn't mean you should refinance. And in a short timeline, like a 2 or 3 year timeline, as we just saw, you're actually not going to benefit depending on what your current interest rate is. 6.5% mortgages right now probably should not be refinancing. You should have a close eye on things. And that's why we made LendZen real time and we gave you complete anonymous access to it, so that you can see what interest rates are doing. You don't need to call somebody who's going to try to talk you into a bad loan. And because all of these mortgages are bundled and packaged and sold into the same market, interest rates have become standardized nationwide. LendZen's always going to offer you the best interest rate because we've eliminated the need for humans in the entire process. So you don't have some guy out there, some girl out there trying to sell you a mortgage and make a commission. We've eliminated all of that. So the price you're going to pay for these lower interest rates with LendZen is going to be significantly lower than anywhere else, which means the chances of you being able to refinance with a benefit with LendZen is going to happen much sooner than anywhere else. So if you're not seeing a benefit on LendZen.com, you for sure are not going to get a benefit at a bank or a broker. There's too many hands in the pie. There's too much cost layered on top. You're just not going to see a benefit. So please start with LendZen.com. Do your analysis here. And if you don't see a benefit, don't even start shopping. But once you see that there's an opportunity for you to refinance, be our guest, shop around, see what other options are available. We know we're going to be the best rate. And once you're ready to move forward, at the very end here, all you have to do is click apply now, and all the information from this scenario is going to be sent to us and we can start working on the loan for you. But let's look at the 7.25% scenario and decide if there's options available for people with slightly higher interest rates. Same thing, we're going to start with the floor rate of 5.5%. We can scroll through the same analysis. Let's start with the short 2-year timeline. Again, it's going to recommend the higher rate because you're going to get more rebate in the shorter timeline. It's going to benefit you faster. You can see that here in the recommended rate comparison, the 7.125. Look at all that rebate versus the costs that you're going to have to pay for the lowest rate of 5.5%. Quick little analysis of what you're going to save in aggregate with the recommended rate. But let's go to the review, scroll down to the bottom here. Now, if you have a 7.25%, big savings, right? A 5.5%, that's really, really enticing. But is this really worth your time? That's the question. And that's what the benefit summary is all about. And again, it's just not worth it if you believe that the opportunity for lower rates to become less expensive or an opportunity to refinance again is coming in the next 2 years. This super low rate is not worth your time, even if you have a 7.25%. Now, will it be worth your time if you think you're going to sit in that loan for a while? Sure. a 7.25, because of the big savings, you're going to recoup the cost of that loan within 3 years and you'll start getting net benefit. And so it might be something you want to consider. But before you jump to the lowest possible rate, keep in mind that you potentially could do a refinance much without as significant savings, but with much less closing costs and no recuperation at all, which is what you're seeing here. Because of the rebates associated with this interest rate, all the closing costs on this loan are paid for you. So your savings are instantaneous. There's no break even, there's no recuperation, and you can see that here. So even on a 1-year timeline, something like a 6.6 is actually going to save you money. So why would you pay a ton of money out of pocket to get a 5.5 today if you think interest rates are going to improve? But if you're at a 7.25, you shouldn't wait and try to hit that home run or time the market. You might as well do a refinance now that saves you some money. And as you can see here, even in a 1-year timeline, you're going to be saving money instantly, right? You can see the calculations changing right here, showing you how much you're going to save. So in 8 months after you do one loan, if rates improve, there's no remorse. You're ready to refinance again, and maybe that 5.5% isn't going to cost you anywhere near as much, or the lower rates, instead of getting a 6.875 on the next refi that pays all your closing costs, maybe you're able to get down here into the 5.75 range and actually see a benefit in 1 year or in 2 years like you are here, but without all this recuperation. Maybe it's an instantaneous benefit because the rebate associated with this rate has improved. So these are some things for you to keep in mind. If you're in the 7%, absolutely, you should be looking at some of your options, but keep this timeline in mind, and keep in mind you shouldn't be chasing rate. You shouldn't be going for the lowest possible rate if you believe interest rates are going to continue to improve. But it also doesn't mean you should be sitting on your hands. There are options available to you that don't cost anything, are going to show you true savings almost immediately or immediately. That way you get some savings today, some payment relief, but you're still in the hunt should interest rates continue to improve over the next 12 to 24 months. So it might feel like a lot of information you're trying to process as I'm talking to you and going through this, but LendZen's at your fingertips. Go ahead, go to the website, LendZen.com, play with it as much as you want, check back every day, multiple times a day, so you can see what interest rates are, run your comparisons, and if you ever need help, the button down here, you can talk to an expert, fill out the form. Either myself or someone on my team will get back to you, and when you find a scenario that makes sense and you're ready to move forward, all you have to do is click apply now, and we'll be ready to receive that loan, underwrite it for you, and as a direct lender, we'll be funding that loan on your behalf. So I hope you found this interesting. Please be careful out there. There's a lot of hungry loan originators who haven't been fed in a long time. And now that interest rates are lower and the opportunity to present savings in front of you is now in their hands, like you have here, doesn't automatically mean that the rate is worth your time, but they will sell it very, very hard. So avoid that mortgage rate trap. There's more to it than just the payment and the rate alone. I hope you found this very informative. I look forward to speaking with you soon. This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.